What's up, guys? My name is Pete, and I'd like to welcome you to another edition of Phipps Tips. In today's episode, we're going to take a look at the overall market. We're going to check out its top performers. We're going to have a look at today's biggest winners and the biggest losers. Got a couple of news articles I'd like to go over today. Some things to do with HSBC and the South Korean Supreme Court claiming that cryptocurrency are labeled assets. Then we're going to wrap it all up with a little bit of Bitcoin technical analysis. All that and more coming up. Stay tuned, guys. And we're on CoinMarketCap.com. The market cap coming in at $346.6 billion with a 24-hour trading volume of $16 billion and Bitcoin dominance checking in at 37.6%. Of the top five guys, Bitcoin up nearly 2%. Ethereum up 3.5%, Ripple up nearly 5%, Bitcoin Cash up 5%, and EOS up 4.42% on the day, guys. Versus Bitcoin, what do we got going on? We got Walton Chain up 10.62%, Elastos up 7.87%, Loopring up 7.5% against Bitcoin, Ontology up 7.37%, and GX Chain up 6.92%. For the most part, guys, a little bit of shallow red in lots of the coins today. Looks like a bit of a bounce back from yesterday's minor dip, as we're up roughly about $10 billion in market cap. We're going to check out our gainers and losers of the day. Our top gainer of the day is T-Coin, up 155.66%. We Are Satoshi, up 90.88%. Bitcoin Interest, up 87.02%. BitTube, up 84.23%. And Air Token, up 79.66% on the day, guy. Bunch of nice gains going on there. Our biggest losers of the day. Oh, poor One World. Taking in the number one biggest loser spot. Down 36.89%. Fujinto down 30.85%. Ethercash down 22.16%. Quark down 19.56%. And the eDinar coin down 16.56% on the day, guys. On the day. We're going to move into our technical analysis. I'm sorry. We're going to move into our news articles now here, guys. So just hang out. We'll be right back. HSBC exec warns digital islands could inhibit blockchain trade. When HSBC's Vinay Mendonca thinks about how distributed ledger technology, or DLT, will reshape global trade, he sees two scenarios, one inspiring, the other dispiriting. In the best case, blockchains and other digital platforms should do for the global value chain what shipping containers did for physical transportation of goods. Just as the standardized dimensions of containers allowed them to move around the world easily from ship to rail to truck, DLT with data standards and interoperability ought to create seamless flows of value. But without such standards, trade finance could end up on digital islands or silos disconnected from each other, says Mendonca, the global head of product and propositions for global trade and receivables finance at HSBC. And he believes that would do no one much good. It's perhaps not surprising HSBC is thinking about interoperability. The bank has a finger in just about every trade platform of note. HSBC was the first bank to partner with and invest in TradeShift, the digital trade platform which boasts 1.5 million suppliers in 190 countries. Goldman Sachs led further $250 million funding round earlier this week. HSBC has also gone well past the proof of concept stage, completing the world's first blockchain-based trade finance transaction with food giant Cargill and R3's Corda platform. Further, it's a key member of WeTrade consortium, which uses Hyperledger Fabric, and that's not including a number of Asia-specific consortiums and projects of which it's a part. To Mendonca, it's important to bring the interoperability discussion to the table as early as possible. He tells CoinDesk, A fundamental challenge for all of us is to make all of this fit together. So, how do we make sure all the cargo solutions in Corda has interoperability with the National Trade Platform in Singapore, as an example? Hence, an international set of standards that everybody complies with is needed, Mendonca states. Setting the standards, stepping back, the HSBC executive's concern for how to connect various platforms grows out of a realization that trade finance cannot be digitized in isolation. It has to be about total digitization of trade, issuing paper, issuing purchase orders, accepting invoices, and shipping goods. Within that merging of physical and financial supply chains, clients can have a discrete step for financing options, says Mendonca. So not a completely different process, but really have that embedded within the existing process. Would that if it were so simple? One problem is that construction of much of this architecture is at the R&D stage, and so different initiatives and splinter groups are inevitable. Mendonca said it is difficult to call how things will progress, but he guessed that there could be some consolidation happening before too long. Some working groups may merge with others that are more advanced, he said, adding that he now only gets excited by projects that can scale for real, as opposed to POCs done in a lab or a sandboxed environment. Returning to the question of standards, Mendonca touched on some practicalities whereby the industry needs to decide, are these the standards we will all accept on an invoice, on a purchase order? Then, if that can be achieved, what technology you use to make it happen is probably slightly less of a problem. Agreeing on the standards is likely the bigger challenge, he said. We will have to pull together as an industry to make that happen, and it's not going to be easy. But to be fair, I think this time around every working group realizes that it has to be a building block. Interoperability shouldn't be an afterthought. Collaboration or competition. This all sounds great, but it's well known that big banks are touchy about sharing anything that could give their competitors an edge. As well as being careful about data sharing, using platforms like TradeShift that are essentially bank agnostic means valued customers engage with multiple banks. However, Mendonca pointed out that HSBC has actually been doing this type of thing for years with the SWIFT for Corporates channel, a service provided by the International Financial Messaging Network for treasurers of multinationals. Its big benefits is being bank agnostic, he said. For instance, you don't have to connect to 5 different banks. You connect once you can give an instruction to all those banks. So stuff that was put in place a while ago for cash is now available for trade. The intuitive play in a more distributed world, then, is to define which factors banks need to collaborate on, and those they can compete on. They can agree there's excuse me, guys. They can agree there's a need to collaborate on the exchange of purchase orders and invoice data, for instance, because this will make customers' transactions more efficient. On the other hand, HSBC would compete with others on the reach of its network to support transactions across the globe, Mendonca said, or the advisory capability of its trade experts and the service levels it offers. As such, HSBC is not intimidated in any way by other big banks joining it on a particular platform. Mendonca concluding, we have been offering supply chain finance solutions to clients for years. When they tell us they are looking at a bigger picture, we understand these end goals. So guys, what do you think? Do you think HSBC is on the right path here? Or at least this executive stating that, big banks need to pull together to have this distributed ledger technology shared between banks? I mean, personally, I think that HSBC is a bunch of crooks. It's been the center of big money laundering for probably 15 years now, guys. The HSBC, what it stands for is Hong Kong Shanghai Banking Corporation, which means that it's an Asian-based affiliation. and like it's based out of London, like the corporate offices in London, and it's had regulators looking into it, or auditors, not regulators, auditors looking into it in the past because of, laundering of money from criminals, to say the least. So, I don't find HSBC being involved in this, at least in the crypto space, as a good thing, guys, because, big banks, especially big banks like this, who have a reputation for being a little underhanded and a little dirty, it's helping out other banks do the exact same thing. And, that is not what cryptocurrency is about. That is not what it was created for originally. Originally, Bitcoin was created to get out from underneath these big banks. So, that's just my opinion, guys. That I found this article interesting because, on one hand, this bank has been home to criminals who used it to, further profit their own dark agenda. And now, on the other hand, they're wanting to get into a space that's, for the common man, like you and myself. Personally, I'm not opposed to, banks entering this space. I mean, it's up for grabs for anybody. But when a company like HSBC, who does not care about, the little guy, and they're just out to make their own money, get involved in things like this, it's an infuriating thing, guys. So drop me a comment down in the comment section. Let me know what you think about HSBC. I mean, this guy, he seems like a nice fella, but, he's a corporate executive, so I'm sure he's got his own agendas. Anyway, moving on. We're going to get into some Supreme Court action in South Korea. Stay right there, guys. And our second news article of the day, guys. South Korean Supreme Court rules Bitcoin is an asset. South Korea's Supreme Court just ruled that Bitcoin is a legally recognizable asset. The landmark ruling occurred on May 30th, 2018, and it overturns a decision made by one of the country's lower courts in a case dating back to last year. In September of 2017, the Suwon District Court charged 33-year-old An with the sale and distribution of child pornography. Operating a website since 2013, An was arrested in May of 2017 for disseminating some 235,000 obscene files. Even though the court handed An a guilty verdict and 18 months in prison for his actions, it did not confiscate the 216 bitcoins An accumulated in exchange for the porn. According to the court, the government could not seize An's Bitcoin because, unlike other assets tied to illicit dealings, they are not tangible. It's not appropriate to confiscate Bitcoins because they are in the form of electronic files without physical entities, unlike cash, the court ruled. Virtual currency cannot assume an objective standard value. Now, the country's Supreme Court thinks otherwise. The Suwon District Court decision was appealed, and upon being challenged in South Korea's highest court, it didn't hold up. Seeing as An accrued his digital fortune in exchange for an illegal service, the court reversed the decision and mandated that it is lawful for the government to confiscate it. Korean law stipulates that a seizable hidden asset ranges from cash, deposits, stocks, and other forms of tangible and intangible objects holding standard value, i.e. Bitcoin or any other cryptocurrency. The ruling from this Tuesday reads, Bitcoin is intangible and comes in the form of digitized files, but it is traded on an exchange and can be used to buy goods. Therefore, receiving Bitcoins is an act of taking profits. An's sentence will remain the same, but he'll have to forfeit 191 Bitcoins worth roughly $1.4 million at press time, along with some $654,000 in cash. Tracking On's transactions on Bitcoin's ledger, the court was able to determine how many Bitcoins he received as payment. On received Bitcoins by giving a certain Bitcoin address to pornography watchers online. Records stored on Bitcoin's blockchain prove that Bitcoin sent to him should be seen as profits online, the court ruling stated. The rulings is a decisive, if a roundabout, benchmark of cryptocurrency's legal status in the country. It gives digital assets like Bitcoin enhanced legitimacy at a time when South Korea is also in the process of legalizing and regulating ICOs. After effecting a domestic ban on ICOs in September of last year, the South Korean government has approached the cryptocurrency industry with ambivalent resolve. Tuesday's ruling, and the outlook of formal framework for token sales, however, seems to be steering official policy in a clearer, more proactive direction. What do you think, guys? I find that this ruling is fantastic. Not only does it get this sick psycho off, out of public grace, but it also does one thing for cryptocurrency, and that meaning that, at least in Korea, South Korea, and hopefully, the United States takes this as, a means and a thing to watch, that they've regulated it. South Korea has now labeled Bitcoin as an asset class, which, in my opinion, that's what it is. It's not used as currency. It's not. It's an asset, guys. It is a form of value, a digital form of value. So, it needs to be regulated like that. And I hope that the SEC sees this, that what South Korea has done, as the correct path to follow. So hopefully with anything moving forward regulatory-wise, this article and this is actually looked at, through the proper channels so that, Bitcoin and cryptocurrency can be regulated properly and not just suffocated. Drop me a comment down in the comment section, guys. Tell me what you think. Do you think South Korea has made the right decision on ruling it an asset class? I think so. I don't think that Bitcoin will ever be a currency, but I've been wrong before, and I wouldn't be surprised if I'm wrong again. But we'll see. Only time will tell. Moving on to some technical analysis, guys. Stay right there. And here we are, guys, on the Bitcoin versus US dollar day scale using the Bitfinex exchange information. And guys, we have a green candle today. How about that? As you can see, we're still in that little upward trend that we had posted yesterday. I will break out our trend line and redraw that. For those of you who missed yesterday's edition, I'll show you. That is what we're looking at right there, guys. But what I did notice, we have broken out of it, but it took me a couple days to see this, guys. But downtrend. Look at that. Look at that. It's actually in a channel like so. That's what we were seeing. But we've currently broken out of it. We're testing this little area here again as support. So hopefully we see exactly, where we're headed as the days continue on. I've been hearing a lot of news lately that June's going to be the month. And tomorrow, actually, guys, funny story, like on the 6th of every month, lately, we've been seeing the high and the low. So here I'm showing you guys, I currently have this set on the 6th of May, where we were at $9,600 or $9,968. We didn't quite break 10K. If we go back to the 4th or the 6th of April, we'll see the all-time low that we had. That was like the current low. Then, if we go back to March 6th, we can see that we were at a high again of 11,000, yada, yada, yada. February 6th, we were again at a low. So, what we can see, guys, is the 6th of each month seems to be like a special day. Now that we have targeted that, now that we have seen that happen, we know that, well, I shouldn't say we know, but it's fair to assume that we should reach either a high or a low tomorrow. Will that happen? Who knows? Because, as we've seen with Bitcoin, that once a pattern is recognized, it tends to shift away from that pattern. Everybody thinks they know what's going to happen, and either it does the exact opposite or it doesn't do anything. You know, like consensus. The last 3 years prior to this year, there was supposed to be a bull run that led up to, you know, recent highs or new all-time highs for Bitcoin and cryptocurrency in general. And, you know, that was being touted all of April. Oh, once May gets here, you know, the bull run will take off. Once consensus happens, the bull run will happen. Well, consensus came and went. There was no bull run. So, you know, kind of weird. So now that this has been noted, that the 6th of every month, and you know what, I'm going to go ahead and mark that, guys, with just a brush here. 6th of March, right there. We'll mark that. Then we've got the 6th of April at the low. So we'll mark that. Then May, we have the 6th, which was right there. And now June, what we can expect, guys, since we saw the high in May, is that tomorrow we'll see Bitcoin dump if it continues along this pattern of high, low, high, low, high, low every 6th of each month. But since that pattern has been recognized now, guys, will it stay the same? I don't know. What we're going to do, we're going to change this here. No, I don't want red since our candles are red. We'll change it to blue. And from here to there, that's, oh, just like that. And from here to here, like so. God darn it. And then we're going to go ahead and finish it out with from here. What we can expect is hopefully not a new low, or we want a higher low, not a lower low. So we want a higher low. So if we do have a low, guys, we want it to be higher than this most recent low of April 6th. So what we can see there currently is that we're still trending along. And with any luck, guys, we won't see this low at all. And it'll just continue along this trend line. And we'll just continue making higher highs. Or higher lows and higher highs. And let the price of Bitcoin just increase steadily over the next month or so. Now, a lot of people are stating, a lot of technical analysis or technical analysts that I follow are stating that this current rise that we're seeing right here, guys, this little bit is not going to be sustained. We will end up faltering out of it, crush this trend line or this line of resistance or this line of support here, and then just fall down into the 6K range. That's what I've been hearing a lot of. Now, will that happen? Who knows? You know, Bitcoin acts the way Bitcoin acts. All we can do is just, wait and see and follow the technicals and hopefully watch, if it does work technically and does do what it's technically supposed to, we should see it increase in price, guys. But as I've stated and will continue stating, Bitcoin is manipulated. I'm also going to take this time to say that I am not a financial advisor. This is not to be taken as financial advice. I'm just using this as educational and entertainment purposes only, guys. So trade at your own risk. But as I will state again and always, don't trade Bitcoin. If you want to trade, find a coin that you like, stay in it. So guys, that's what we've got here. That's what we've got going on. I wish I had more for you right now, but again, we're just still on the wait and see time scale here. So that's going to do it for our video today, guys. If you're still with me after all this time, hit that subscribe button as I try to post a video every single day, Monday through Friday. If you learned anything new, hit that like button and share it with a friend, as your friends would like to learn things new too. And as always, guys, thanks for watching, and I'll see you in the next one. Peace.